There's a lot to think about when buying a house. The schools, the neighborhood, move-in ready or fixer-upper. Then, the financial considerations. What can I afford? How do interest rates compare? What type of loan should I get? It can be overwhelming. Thankfully, Quizzle's First-Time Homebuyers course gives you the tools and knowledge to purchase your first home with confidence. First, check your credit report, not just your credit score. Most of the really important stuff is on there. You can get your credit report and score for free at Quizzle.com. Look for errors or small debts you need to settle. Take note of your credit utilization. That's the ratio of credit used versus credit available. Make sure all your bills are paid on time, every time. Building good credit takes time, so even if you're just thinking about buying a house, it's never too early to start prepping your credit. Finally, take a close look at your personal finances and consider both how much you can afford to make in monthly payments on a mortgage, as well as what size down payment you can make on your new home. Remember, you'll need extra cash for closing costs, like title insurance, appraisal, processing, underwriting, and surveying fees. Now that your credit is good to go, it's time to get pre-approved for your mortgage. Don't just get pre-qualified, get pre-approved. While pre-approval doesn't guarantee the bank will loan you that exact amount, it puts you on a clearer path toward the best loan for you. Getting pre-approved gives you a better understanding of your overall budget and what kind of monthly mortgage payment and interest rate you might expect. Getting approved for a mortgage is a lengthy process involving a lot of paperwork. As part of this course, we created the Home Buying Checklist for you to keep track of everything you will need to complete the process. Download it, print it out, and stick it on the refrigerator. Now, it's time to consider different kinds of loans and mortgages that may be available to you. If you plan on putting less than 20% down on your loan amount, you will likely need to pay private mortgage insurance, or PMI, on top of your mortgage payment. PMI protects the lender in case you don't pay your bills, and the monthly fees can range from $50 to a couple $100 per month, depending on loan size. Also, when calculating costs, don't forget about property taxes, homeowners insurance, and upkeep on your new home. Your lender may know how much you can borrow, but only you know how much you can afford. So, you're pre-approved. Now, the fun part. Connecting with a real estate agent and searching for your new home. Once you've found your dream home, work with your agent to negotiate the final purchase price. Again, this is where pre-approval comes in handy. It helps streamline the rest of this process. Once you and the seller have agreed on a price, it's time to close. Closing is the completion of both the real estate sale and the mortgage transaction. At closing, you will sign documents putting you in possession of the home, as well as the mortgage documents granting you the loan to purchase it. Then, your mortgage company representative will pay the seller for your new home on your behalf. This process, from beginning to end, can take around a month. Sometimes quicker, sometimes a little longer. Keep cool, stay organized, and know that this is how the home buying process works. Once the seller has been paid, you will be given the keys to your new home. And then begins a process of a different kind. Moving in.